What's up, Mavericks? Looking for startup funding with long repayment terms and competitive rates? Well, you're in the right place because SBA Loans might just offer exactly what you're looking for. Stick around and I'll walk you through everything you need to know about SBA loans for startups. So, is it possible to get an SBA loan for a startup? Well, the short answer is yes, you absolutely can, as long as you meet the requirements set by the SBA and their intermediary lenders. And funds from your SBA loan can generally be used for just about any startup cost you can think of, whether it's purchasing a business or franchise, hiring employees, buying equipment, or even purchasing commercial real estate. Now, as a startup, you might find your options a bit more limited compared to established businesses, but don't worry, there are still some great SBA loan options available to you. Let's take a look at 4 SBA loans that are most suitable for startups: microloans, 7A loans, express loans, and CDC 504 loans. One of the easier SBA loans to qualify for is a microloan. These loans are offered through nonprofit intermediary lenders, making them more accessible for small businesses just getting off the ground. Through the SBA Microloan program, qualifying businesses can receive up to $50,000. However, keep in mind that the average microloan is around $13,500, so this option is best suited for businesses with smaller capital needs. Microloans do have some limitations in terms of how the funds can be used. For example, you can use a microloan for things like supplies, inventory, materials, furniture, or working capital, but if you're looking to buy real estate or refinance existing debt, this isn't the loan for you. The good news is that microloans come with repayment terms of up to 6 years, giving you plenty of time and flexibility to get your business off the ground. Let's move on to the most popular SBA loan program, the standard 7A. If you need more capital than what microloans offer, this is the option you'll want to explore. With a 7A loan, you can receive up to $5 million, and unlike microloans, you can use these funds for a broader range of purposes, including purchasing real estate or refinancing existing debt. Repayment terms are very flexible as well, up to 25 years for real estate and up to 10 years for other purchases like inventory or equipment. However, keep in mind that a down payment may be required to secure a 7A loan. And a word of caution, startups might have a tougher time qualifying for a 7A loan and will need to find a startup-friendly intermediary lender. Also, be prepared for a longer application and funding process, which can take up to 90 days or more. So if you're in a rush for cash, this might not be the best option for you. Next up is the SBA Express loan, which falls under the 7A umbrella but comes with a few differences. SBA Express loans offer up to $500,000, which you can use for the same expenses as a standard 7A loan. However, because these loans have lower borrowing limits and the SBA backs a smaller percentage of the loan, you might find that interest rates are a bit higher than those of a standard 7A loan. So why would you choose an Express loan then? Well, the main advantage is speed. This program guarantees an approval decision within 36 hours compared to the 5 to 10 days it usually takes to get a decision on a 7A loan. But just remember that this quick turnaround only applies to the approval decision. It will still take 30 to 90 days or more to complete the application process and to get your funds. Finally, let's talk about the SBA CDC 504 loan program. This one is ideal if you're looking to purchase fixed assets or commercial real estate. These loans are a bit different because they require 2 lenders plus an investment on your part. So here's how it works. A bank or other lender provides up to 50% of the project costs. A certified development company, CDC, provides up to 40%, and you, the borrower, pay the remaining 10% or more. The SBA guarantee portion of the funds can be up to $5.5 million, which you can use for purchasing or upgrading land or commercial property, acquiring long-term assets, or refinancing debt related to business expansion. Now that you know the loan options, let's talk about what it takes to qualify for one of these SBA startup loans. First off, you need to meet the requirements set by the SBA and your chosen lender, and here's a quick rundown of those requirements. You must own a for-profit business that operates in the United States, you need to have exhausted other funding options before applying, and you must show a need for the loan and the ability to repay it. Some businesses, like those involved in real estate investing, illegal activities, or lending, aren't eligible for SBA loans. Nonprofits are also generally ineligible. Lender requirements can vary, but typically you should have good personal and business credit scores, and it's a plus if you have at least 2 years of industry experience. A down payment may be required, and you might also need to put up collateral to secure the loan. If you meet these qualifications, you may be on your way to securing an SBA startup loan, but keep in mind this isn't a simple or quick process. You'll need to put in more effort compared to, say, applying for a line of credit. So here's a quick guide to the process. Check your credit score. While SBA loans are more accessible than traditional bank loans, they still require a solid credit score. Generally, a score in the high 600s or better will improve your odds of approval. Number 2, find a startup-friendly lender. Start by checking with your current bank or credit union. If they don't offer SBA loans, they can often point you in the right direction. You can also use the SBA's Lender Match service or check out our list of the best SBA lenders linked in our description below. Number 3, gather your documentation. Be prepared to provide financial statements, tax returns, resumes for all owners, and business licenses. As a startup, you'll also need to include your business plan and future financial projections to demonstrate the potential for success. Number 4, submit your application. Once you've gathered everything, submit your application and be ready to provide additional documentation if needed. Keep in touch with your lender to ensure the process moves along smoothly. And that's it. While the process might seem complex and time-consuming, the reward is long-term, low-cost funding that can help you get your startup off the ground. Thanks for tuning in to the Merchant Maverick YouTube channel. Don't forget to check out our full article or even more detailed information about SBA startup loans linked in the description below. We'll see you next time.